Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are today's top stories. The Bangko Sentral forecasts slower growth next year and in 2024 due to the impact of higher interest rates.
U.S. Vice President Kamala Harris is set to meet President Bongbong Marcos in Manila today. The Philippines and the United States are expected to open talks on a nuclear power tech sharing agreement.
Visitor arrivals exceed 2 million since the country eased restrictions back in February.
And the Trade Department targets to roll out a 250 million peso startup venture fund by early 2023. Let's begin our broadcast with the Bangko Sentral forecasting slower growth in the next 2 years over high interest rates. The BSP said that while GDP expansion is likely to settle within the government target of 6.5% to 7.5% this year, economic headwinds could result in slower growth in 2023 and 2024. Now, in its latest monetary policy report, the Bangko Sentral said the forecast for 2024 is lower, saying it reflects slower external demand and the impact of policy tightening. Now, just last week, the BSP increased rates by another 75 basis points, bringing the benchmark rate to a near 14-year high of 5%. The central bank did not specify its forecast, but the Development Budget Coordination Committee, or the DBCC, pegs GDP growth at 6.5% to 8% in 2023 and 2024.
The Philippines and the United States are set to negotiate a deal on sharing nuclear power technology. That's according to U.S. Vice President Kamala Harris. And Harris announced the two nations will open talks on a deal for the Philippines to build nuclear power plants using American technology. The U.S. aims to deploy advanced reactor technology to help the Philippines meet its power needs with a civil nuclear energy deal. The negotiations are set as U.S. Vice President Harris arrived in the country yesterday, November 20, for a 2-day visit. Harris is set to meet with President Bongbong Marcos and Vice President Sara Duterte in separate bilateral meetings today.
And speaking of nuclear energy, President Bongbong Marcos touts inviting 6 leaders into crafting possible deals and investments in the country. Now, that includes a potential nuclear energy deal with France. President Marcos says nuclear energy is one of the subjects he had touched upon during his bilateral meeting with French President Emmanuel Macron on the sidelines of the APEC summit. President Marcos says the Philippines would learn a lot from France in terms of using nuclear power.
France is a leading proponent of nuclear energy, and their experience is quite extensive. And should we go ahead with partnership with France on nuclear energy, I am very confident that it will be a strong partnership, simply because they have up to 67% of their power production is from nuclear energy.
Now, the president returned to the Philippines from the 29th APEC summit in Bangkok on Saturday. Now, upon his arrival, the president says APEC leaders were able to touch upon food security, digitalization, and women empowerment, among other subjects. President Marcos also says he expects APEC countries to start taking more steps in mitigating climate change, which had been a vital point of discussion during the summit.
That was really the overarching subject. Of course, the economy, you start off talking about the economy, you end up somehow, at some point, talking about climate change. And so I think there will be a very strong push. The APEC countries have really said that we have many agreements that are in place, but there's very little that has been actually done.
In other news, the Tourism Department reports that visitor arrivals have exceeded 2 million since the country eased restrictions in February. The DOT says almost 1.5 million of these arrivals are foreign tourists, while over 500,000 are returning overseas Filipinos. The 2 million total as of November 14 also exceeded the agency's 1.7 million forecast for the entire year. Arrivals from February to September generated over 100 billion pesos in visitor spending, much higher than last year's 4.9 billion pesos. To maintain this growth trajectory, Tourism Secretary Cristina Frasco says the Philippines must continue to convey not only its openness to welcome tourists, but also its conduciveness to tourism businesses. All right, as more and more tourists arrive, are more and more hotel rooms getting booked? Let's check up on the hospitality industry with Benito Bengzon, Executive Director of the Philippine Hotel Owners Association. Sir Bong, good day. Thank you for joining us. What can you say about your performance so far this year, 2022? How does it compare to the previous pandemic years, 2021 and 2020?
Good morning, Jess. Good morning, Danie. Thank you for having me again in your program. We in the Philippine Hotel Owners Association are very happy with the performance of our hotels in the past 11 months of the year. Certainly, the occupancy rate, the revenue for 2022 are much better than what we registered for 21. And this has been driven largely by the markets, or the travelers coming from the US, from Canada, and the UK. Of course, we're also cautiously optimistic about 2023. We know that there are a lot of challenges, but we remain hopeful that it will be better than 2022.
Okay, when you say that your numbers for 2021 are better in terms of revenue and hotel occupancy compared to the past 2 years, can you nuance that for us more? At the same time, how does that compare to pre-pandemic levels naman? And how far do you think are you from reaching the 2019 levels that you had?
Let's look at 2023 versus 2022. For the hotels, for the first 11 months of the year, we're registering about 60 to 80% occupancy. Of course, it varies depending on the property, depending on the location. Last year, 2021, many of the hotels were doing about 50%. So clearly, 2022 is better. As to the question of how far are we from pre-pandemic levels, I think the figures on foreign arrivals will give you an indication of how much more we have to work on. The Department of Tourism reported that we have already attracted about 2 million foreign visitors for 2022, but that's still a long way off from the 8.2 million that we registered in 2019. So that gives you an indication of how much we have to work on. And many experts, both in international tourism associations and also the local industry stakeholders, feel that the earliest that we can go back to 2019 levels would be 2024.
All right. Sir, realistically, how will we get to the 8 million levels by 2024? Is this number, the 2 million, still because of the China COVID policies, now they're reopening? Is it because of slowdown in global economic growth, more competitiveness in terms of COVID policies of other countries? Why are we still at this point where we're reopened already, not there? And how confident are you that we will be getting back on track?
Well, all the factors that you mentioned are the reasons why we haven't really recovered as fast as we should. Everybody's looking at China, China being a major inbound and outbound market. There are news or reports that China might open as early as March of next year. Clearly, this is something that hotels and resorts are anticipating. For us to go back to 8.2 million, in the case of the Philippines, we have to be able to get back our East Asian markets, which in 2019 accounted for more than 50% of all arrivals. So while we are waiting for China to open, I think the big challenge is for the Philippines to start looking at other source markets, as what our neighbors are doing now.
Okay. And sir, what about the issues of inflation just for domestic travelers? Are people still revenge spending? How much longer do people have money to be able to do so until inflation starts hitting? Or are you saying that the travel sector is separate, at least the domestic travel sector is is largely insulated from the inflation woes?
The impact of inflation on travel has been the subject of lengthy discussion, as has the discussion on revenge travel. How much longer will we be able to sustain this? Clearly, inflation, which government authorities reports has been the highest in 14 years, will be a major factor in travel decisions for 2023. The challenge for us in the hotel industry is to make sure that we're able to offer value and to come up with a price point that will still be within reach of, in this case, of domestic travelers. And how do we do that? By making sure that we, add value to our products and services, to make sure that we continue to be innovative and creative, so that our offers are compelling. But apart from the inflation issue, of course, we're also monitoring developments around the globe. The situation in Ukraine certainly will affect long-haul travel. Another important thing that has to be factored in is the airfare has to be kept to a reasonable level.
Now, speaking of value for money there, Sir Bong, are you looking at the possibility of, sorry about that, accommodations increasing rates in the near term, especially, of course, as we try to deal with higher inflation, plus a possibility of an energy crisis next year as well? So how are you making your prices more attainable?
There's always a sweet spot. No? We're looking at a daily rate that is affordable to the travelers, but at the same time will allow the hotels and the resorts to operate viably. But again, to make it more compelling, what we're doing is to make it more attractive for our customers. So how do we do this? Many of our hotels are coming up with new products. They're offering all more alfresco options, for example. They're doing pet-friendly rooms, pet menu. Many of them are also offering more healthy options, no? Because travelers now are more health conscious, no? Especially because of the pandemic. So these are just examples of the new and innovative ways that the hotels, the steps that the hotels have taken to be more attractive.
Now, also, of course, hotels have to face some stiff competition as well with the more quote-unquote informal type of accommodations like the ones that we have on Airbnb and other platforms. So how are you stacking up against competition?
The hotels in the 4-star, 5-star categories do not really see Airbnb as a direct competition because they don't have the amenities, the services that we have. If at all, it might pose some challenges to those hotels in the lower star categories. Again, the challenge here is for us to be very creative, competitive, not only among ourselves, but more importantly against our neighbors. I think what we have to consider here is that many of the easing of travel protocols that we've seen in the last couple of months was something that our neighbors did 6 months back or 6 or 8 months ago. So we have to step up our game, and even in the terms of expanding our marketing and promotions campaign around the globe, the government and the private sector have to step up their efforts.
Okay, and finally, sir, before we let you go, give us an idea of the employment situation in the industry. Have we reached, have we reabsorbed those that had lost their jobs in pandemic, and also profitability? Where are we?
Well, in terms of the employment, admittedly, we're facing some challenges in getting back some of the workers that we lost during the pandemic. Why is this? Many of them are opting for other jobs that provide work from home options. And of course, since some destinations abroad are also opening up, there are some who are exploring the more lucrative job opportunities from abroad. So I think what we have to do is to make sure that we're graduating enough competent people who will be able to fill the needs of the tourism and the hospitality sector. In terms of profitability, again, since we're not back to 2019 levels yet, we don't have a fraction of the foreign tourists. We still have a long way to go.
All right. Finally, sir, targets for 2023. Yes. What are your feasible targets here in terms of, maybe percentage occupancy rate compared to, of course, the pre-pandemic levels? And you did already mention 2024 will be the year.
we're looking at if we can sustain occupancy at 80 to 90%. That would be a very comfortable level, for many of the hotels. Again, we have to consider that the performance indicator is not limited to just the hotel occupancy, but the more important indicator is really the average daily rate, not the room rate. This is where we have to strike a balance to make sure that we're able to operate viably while making sure that we remain within reach of the consumers.
All right.
All right. Thank you so much for those updates, Benito Bengzon, Executive Director of the Philippine Hotel Owners Association. Thank you, sir.
Thank you.
Now let's pause for a quick break, but coming right up after that. The Philippines' ranking in a global corruption index worsens.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danie, Laurel.
The Philippines slipped 3 places in the corruption index released by Global Risk Profile. The Philippines ranked 105th out of 196 countries and territories, showing a decline from last year's 102nd ranking. The 2022 Global Corruption Index showed that the Philippines had a medium risk level for corruption. The index measures public and private corruption based on perception and experience, as well as other white-collar crimes like money laundering. The report noted that financial aid programs during the pandemic created opportunities for corruption and bribery. Among Southeast Asian countries, Singapore is considered the least corrupt, ranking 13th in the index.
The Trade Department is hoping to roll out a 250 million peso startup fund that's early next year. Trade Undersecretary Rafaelita Aldaba said the Startup Venture Fund, or SVF, has been delayed by the change in administration. Aldaba told Businessworld that they are now finalizing the guidelines and the schedule of implementation for the startup fund. The SVF's 250 million peso budget will come from the National Development Corporation and is targeted at startups in the seed to Series B stage.
The Independent Electricity Market Operator of the Philippines is hoping to launch Mindanao's Wholesale Electricity Spot Market, or WESM, by the first quarter of 2023. WESM is the venue for generators to sell excess power not committed to long-term contracts. The operator says the Mindanao WESM would precede the energization of the Mindanao Visayas Interconnection Project, or MVIP. This is why the West M must be launched before the interconnection project is completed. The 52 billion peso MVIP aims to connect the three main grids to ensure the sharing of energy across the network.
With lack of confidence and scrutiny on the rise following the collapse of FTX, crypto is now facing a pivotal moment. The question now is, will the industry take a turn for the better and find its way to a new frontier? Or will the crypto space be a lawless Wild West from here on out? Now, panelists at the Bloomberg New Economy Forum discuss opportunities and the warning signs in the industry.
The crypto industry has been cut to ribbons this year.
Finding the right use cases for the infrastructure continues, and that has still enormous potential.
It's not going away. There's appetite in the world for a non-fiat currency. It's not going to take over the world, in my opinion, but there's a role to play. Institutional investors are already there and will be there ongoing.
The confidence, though, of a generation in financial markets has also been shaken. And that's really awful because the 20-some-year-olds to 40-year-olds who are so engaged in crypto, they've got to save for their retirement. And if they don't believe or trust in financial markets, this is a huge problem.
But I think it's a very, very important part of the future. And I mean, we all remember the dot-com crash in 2000, but also going back to the Black Monday in the 20s. So all these new kind of hyper sectors when they first get started, you've got this overexcitement hype, and then kind of there's a correction, and then we learn from it.
It's just too risky to sit out with a bunch of cowboys who have managed to blow themselves up.
The crypto industry has learned why we have banking regulation, right? Because you had the Wild West in the 1920s, you had another incident with the S&L crisis. Yes, you need regulation. Unfortunately, we have primordial instincts, and we got a lot of greedy people, and you can set things up without the right guardrails and cause a lot of damage, which is happening right now.
Right, we've been discussing crypto for years and years, and there's still so much to figure out.
Exactly. More forums to be needed. One next week, actually, in the Philippines.
Okay. Those are the biggest stories on the economic and corporate front today. I'm Jess De Los Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Business World returns. Stay with us.
And you're still watching Business World live here on One News. Now, Dan, quite a rally that we had last week. Question is now, are we due for some profit taking?
It seems to be the case, and you can already see us back to 6,400 levels. Jess, we were, flirting already with 6,500. But then again, like you mentioned, last week there were a lot of things. Third quarter earnings came out as well, and then BSP decision, which bode well for the markets, foreign buying plus the drop in oil. Now, this week, AP Securities is saying that the market may continue its rally, but like you mentioned, profit taking could ensue. People are still looking for leads. Now, let's take a quick peek at the movements here. You've got Converge bringing, the positive breath here, whereas others like URC, Ayala Land, and PLDT are again being sold off. Now, another one that I wanted to take a look at is the peso. This as the the country or the government has said they're looking to tweak, or they're open rather to tweaking foreign exchange rules to shield the peso. The BSP is saying they can adjust the foreign exchange policies to help curb speculation, because there have been some dollar purchases that are believed to be speculative, and that has been adding pressure to the peso. Right now, it's trading at 57.330, so a bit of a weakness by 0.8%. And just a quick peek on some energy companies just before we end the broadcast, as of course, you've got President Bongbong Marcos open to more concrete
Nuclear
steps
talks.
in taking nuclear energy here. You've got FGen, of course, which is the renewable player, up by 0.4%. AC Energy and SP Next. So these three renewables not doing very well actually this Monday morning, but perhaps again some bargain hunting possibly happening. Some profit taking happening there as well, Jess.
Okay, but definitely more talks regarding nuclear power here, especially with the arrival of Vice President Kamala Harris. And that's it for today, November 21, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess Delos Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We're One News, all sides, all the time.